Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. The US futures are trading to the upside because investors are picking up the momentum from European markets, and over in Europe all the major indices such as the CAC 40, the FTSE MIB and the FTSE 100, they are trading to the upside with some decent gains. If you look at the chart for the FTSE 100, you can see that the FTSE 100 index did experience some sort of a pullback when it tried to cross above its previous high, but now the momentum is coming back. We are still unsure if the price can really top the previous levels that we have seen or the previous highs. And I'm not speaking of the highs before the COVID-19, I'm speaking of the highs that the market formed only in the recent previous weeks. Now, the question is why that upside momentum is back in the equity space. Well, investors are optimistic about the disorderly opening of the US economy. The reason that I have used the word disorderly opening is that if we look at states such as California, the business activity over in California is nearly 75%, meaning nearly 75 businesses have returned back to their not to normality level, but to a new normality level. But when we look at states such as New York, they are only set to open the business activity. So there is obviously a massive disparity between the states, hence we say this disorderly open. Nonetheless, markets are taking this as a positive sign that we are coming out of this lockdown phase, and hence the business activity will continue to become better. Now, speaking of the economic activity, it is important for me to bring the economic numbers that we've seen on Friday. Remember, we had the US retail sales number and the industrial output. Both of these numbers were pretty much jaw-dropping, with very feeble and dire readings. Once again, we are not close to form that bottom in terms of macroeconomic data. But it doesn't matter whether we are speaking of the US economy or whether we are speaking of global economy, because we also had yesterday the Japanese GDP number, which also confirmed that yes, the economy is suffering from a deep recession. Now, of course, Japan is the third biggest economy of the world, but today investors have brushed away all those concerns and they are just more interested in this upward momentum, this positive optimism in the market that yes, economic activity is returning to some level of positivity, and this is what driving the equity markets higher. Now, in the commodity space, the same story pretty much is also taking place as well, because we have crude and Brent both trading above 4%. In fact, as you can see in the chart, crude prices have already gone above the critical level of 30. Now this raises the question, are we going to see the prices going all the way to $35? Are we going to see the prices crossing the 35 mark or not? Well, for me, I think 35 is a very critical number, and we may not see the pricing, the crude price crossing that mark this particular year. But only time will tell if I am correct with that, or if the price is ready to kick that $25 mark and then continue its journey to the upside. But now, when it comes to gold prices, there is a very serious and strong momentum to the upside. The prices are trading in around $1760 per ounce, and yes, the target of 1800 is within sight, and the traders are expecting the price to cross above the 1800 mark, because remember, major hedge funds and Wall Street banks such as Goldman Sachs and JP Morgan, they do see the price of gold reaching all the way to the 3000 mark. That raises the question, okay, how is that possible? Well, remember, the Federal Reserve, for now, they have refused to entertain the unconventional monetary policy under which a negative interest rate could also become a reality. but traders are expecting the Federal Reserve to push those interest rates in negative territory, and as we've discussed before, if that happens, then it is likely for the prices to touch that 3,000 mark. That's all for today. See you guys tomorrow.